Hey friend, how you doing? More high value content today for you, especially just for you. So I made a tweet here, right? This chart is a survey. It's the probability of recession in the next 4 quarters. And I wrote, it's never been this high, which might mean the recession is much more soft than expected because everybody expects it. And so the government stimulus will act stronger plus early to combat it. So I know this is just one of my many tweets. A lot of people just gloss over this, which is it's completely understandable and fine because I can't give you all the knowledge I have in a few sentences. But that's why you watch this video. Do you know how bullish this is? There's like gems hidden in this chart here that is very hard to grasp. So this says 43%, okay? Let's look at the past. I want to show you something. Did you know that, look how low, all right, let's check the past, right? 2008 GFC. Actually, before that, people were expecting a recession of COVID. 26% because of the yield curve. 26%. I'm going to quickly show you the chart of what happened in COVID. The S&P, these are monthly candles. This is the S&P 500. S&P 500 US stonks boomers. That's what this is, okay? Just so we're on the same page. The collapse of the zombie virus was 35%. Okay, zombie virus 35%, and then next month bang up. So this wasn't a lot of pain. This was a shock. It was a shock to go down, but the time duration was not pain, suffering. So let's go back and check. What about the one after that? Or check the next one, okay? 2008 GFC. We all know this. This was the end of the world. Like all the collateral Ponzi's in the world for the US banks, zero. They completely misrepresented risk and they put the collateral as houses. The repayments on houses all went to zero because no one could conceptually even believe houses could become a Ponzi. Only 23% of people believed it was coming. And the yield curve said 100% it's happening. Okay. Let's check the damage here. There was a lot of damage. We're going to check. And we're also going to see the tech one as well. So the S&P 500, big damage. 57%. And the tech bubble before that, 50%. So these were absolutely crushing. Absolutely crushing. However, there was only 23% and back here, like 19%, man, who thought a recession was coming in the next 4 quarters. So completely disregard this one because they were wrong. They were wrong. So less than 20% of people, and we just had the biggest up-only run of all time. So let's check the stocks again. You got to take an appreciation for this, man. Literally one of the greatest runs we'll probably ever see on a chart. Literally up only for like, 29 years? Ridiculous. Ridiculous. Where's the corrections, man? Where's the corrections? So let's move on. So we can automatically see. So this was, let's change this to green. In the zombie virus, okay, it wasn't as bad as we thought because they printed hard. But we're going to leave these ones red. So not that many people thought it was bad, and this was really bad. And same here. Same, these were very, very vicious. Also interesting, false alarm. Before that, they got that wrong. So let's actually go back in time. Let's check where 1998 is, all right? Let's go back and bring the chart up. I want you to see how the crowd consensus is always wrong. Let's look where 1998 is. So this is so crazy, man. This is why you're watching and you're listening. Who the hell does this in crypto? No one. Look at this. This is where everyone expected the recession. See these candles? See this candle right here? Everyone expected the recession. We're going down. And then, see you later. Of course, what happened? Yes, it did come later. But man, this is a long time, friends. This is from September 1998. You can't even say things are like really starting like, until 2000. So you had like some long time. Whoa, that's big. Wow. Plus 50% move in the stock market index, S&P 500. That is huge. Oh my God. What about from the top? Oh my God, it broke the top by 30%. Wow. This is absolutely ginormous for the US stock market index, mind you. Right? This is not the NASDAQ. This is the S&P 500. Wow. So the crowd got it wrong. So the crowd thought a recession's coming and they completely got it wrong, and then we pumped. And then the recession came. It was crazy. You know what happened up here, right? Just as we can see. So everyone thought the recession was coming here. But then when we got up here, they dropped all their probabilities back down to like 19%. See here? Look, they dropped it down to 19%. So like, oh, it's coming. And then no, it's not. A lot of people. So from 27.5% down to 19.2, that's like a third. That's like for every 3 bears you see, one of them says no more recession. So that's the calamity of the damage. Like imagine like in 2023, for every 3 bears we know, they go, hey man, recession's cancelled. We're going up only in crypto. That's the type of danger that does form. Eventually does form a trap, right? So look what also happened. 1987, 31. This is high, okay? So, you know, I'm going to delete all these. This is, let's look at the percentages. This is like, this was low, L for low. So a low amount of people predicted it. Low as well. Low amount of people predicted it. Here, this is medium, but it's kind of low, man. Compared to what it is now, it's low. So low for the zombie virus, low for the GFC. Here is low for tech bubble, right? What about in 1987? This was pretty high, above 30%. High. Let's go back and see what happened in 1987. In 1987, there was a famous crash in the stonks. It just in 1 month went down like 35%, and then it went up only. It went up only. Everyone expected it. There wasn't a recession. So this was when everyone thought, oh my God, it's the end of the world. You can even watch documentaries on YouTube, right? Where people talking about this crash, where they literally thought it was the end of the world because it was, I know this looks like absolutely nothing, but like it was big at the time, right? It was big at the time, like 1 month. That's why this is what happened at the lows. It's like crash. Oh my God, 32% down instantly. 1987, at the end of the year, collapse. And they're like, that's it. Here comes the next depression. We paid for our sins starting now. Wrong. They were all wrong. They all expected the recession, man. The crowd was wrong again. So let's go back. So this was low, 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 high. And what about here? 1977 to 78. So this was high again. A lot of people expect a recession. Let's check out 1978. 1982, 1970. Actually, yep. Actually, this is 1979. It's 19. So I already know what the chart's going to do. I haven't looked at this before. So I'm actually doing this live. We're doing this live. Let's look at 1979. Well, would you look at that, friends? Have a look at that. Where's your big crash? Where's your big crash? I want to know. Where's your big crash? A high amount of people, 33% of the crowd said, we're going to get a deep recession. It's all over. So when they really say this, what they actually mean is stonks and everything are going down. Everything's going to the floor. Here it is, baby. So this was the Volcker period. So firstly, what happened was in the 70s, you had Arthur Burns. Arthur Burns was the bad famine, the bad Fed chairman who let inflation run too hot. He didn't hike rates quick enough, and inflation became embedded. And then Paul Volcker comes in, thing around here, and he goes, "I'm gonna crush yous all." He said, "I'm gonna kill inflation." He did that, and he started doing it. He started raising the rates. You know what's crazy, man? You would think he's like insane rates raising would have done the market more than 27%. It only dropped 27%. I know this is unbelievable. This is a monthly chart. You're like, what the hell? He put rates up to 17%. What happened? So I'll play devil's advocate. What actually really happened was the market was losing value to inflation this whole time. It'd been 10 years of going down. It had basically spent all the damage already. That's really what happened, right? So I could always make the case against myself too. So it's like, you know, basically I'm saying the damage was done here. And here was just the market being happy that inflation's been done. But no one knew it was going to go up. No one. There were articles coming out, I think in the Financial Times, saying the equity market is dead. Don't buy stocks. You're stupid. 17 years going nowhere. They're a scam. I've made so many tweets about this. So many tweets. It's crazy. So here we are. A high amount of people believe big bad recession's coming and it's really over. And guess what? Look what happened, man. We literally rebounded. Look at that. And by the way, if you count the candles here, 1, 2, 3, 4, 5. In like 5 candles, we erased everything. That's basically like the stock market being to the high in like 3 months from now. And crypto being like super exuberant, right? So that's crazy, man. Isn't that crazy? But you could also say, right, you went sideways for 10 to 15 years, so you deserve this. So if we go back to today, come on, I'm trying to play devil's advocate. We haven't gone sideways for 10 to 15 years. Yeah. We've had jitters, but we haven't like actually done the up only, or you could say we have. Many people say we have from here. Many people believe we have to pay for our sins. But look at this up only, man. This is 30 years, baby. 1980 to 2020 years, right? This is crazy. 20 years of up only. 20 years. So this is, I know this sounds like a lot, but they did never before printing like before. So maybe we actually keep going, man. That's not like no. That's why the crowd once again thinks it's all over. Maybe we keep going like 29, 30, and then something bad happens. Because no one has it. No one has this scenario drawn. No one. Look at all the crypto influencers. Look at all the macro guys. Everyone's saying, pay me $5,000 and I'll teach you about macro. All those people are saying, the worst is yet to come. We're going down, down. They're all saying that. And you know what? They're all poor because they all need to shill subs and like all this trash content because they don't think like a trader. They don't think like traders and investors. They just tell the crowd what they want to hear. That's it. And that's okay, man. That's their hustle. So we go back. See, I told you, there's so many gems hidden in this one chart, but everyone glosses over it. So I want to take some time to appreciate it. So we've gone, look, so let's actually give the marks of friendship here. So the crowd got it wrong here. So I will do a W for wrong. Actually, let's do an X. The crowd got it wrong here. They 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 got it wrong. Okay? This zombie virus, let's not count this because it's such an unprecedented, because I don't want to like give myself even more brownie points, okay? We're just going to scrunch this up. 4 out of 4 times the crowd got it wrong. And now you're looking at these giant friendship red arrows saying, oh my God, are they going to be wrong again? I don't know, man. I don't know. But I know one thing about humans. Most of them are poor, and most of them don't know how to invest, and most of them are poor trying to invest. So that can only mean trouble. This doesn't mean you're all going to get it right. Okay? And obviously, you're listening to me, you want high value content, you're getting it. We're all friends here. I love you all, and like, we're on the same family here. We're on the same team. That's why we're gonna win. Look at this. I am looking at this saying, okay, never in history have out of 100 people, 44 been telling me things are gonna get really bad in the next 12 months. Like, wow, 44, and you haven't realized that maybe like you have a history of being wrong in your life. So, what does this mean? I mean, it could mean a lot of things, friends. It could mean a lot of things. In my post, I have mentioned something about the stock market. See, even me, it's hard for me to suspend belief and go this. It really is hard for me to do that. But I don't know, man. Like, you're wrong before. Why can't you be wrong again? So, the way I see it, in my explanation here, I talked about the government stimulating to act harder. So, this is the real critical point. The market doesn't even need to go up. You don't need to pray for green candles. You now know with me, so I'm sharing this information with you. I now know, as an investor, that majority of the crowd think the worst is yet to come. You can logically deduce from that this will like trickle to government people, the Fed, government politicians, people who make the policies. It will trickle to them. They read the same surveys, they talk to the same people. They are the humans themselves. They are the survey people themselves. So it's part of the collective thought of all us humans. So if the majority of them think that the worst is yet to come, they're not going to wait for riots to start happening here and go, you know what, we'll start printing money. There might be bullets, shotgun shells flying by this point. You think they're stupid? They want power. They know people are crying today. They know people, here's a sad face, they know we're crying today, man. Do you think they're going to wait for everyone to get their pitchforks out and start bombing everything? No. They are going to act very soon. They're acting now. Uncle Joey Biden just put 1.7 trillion stimulus. They know, man. They love power more than you love money. They want power. This is how they're acting. So, this is so juicy to understand. Because now we know, okay, if the majority of people think that the worst is yet to come, that means they are going to stimulate for the worst case. That's what they're going to do. Wouldn't you? Like, if you wrote, the worst is yet to come, okay, well, give us a response that protects against the worst is yet to come. You know? You're going to war, you go, okay, the worst is yet to come. Bullets are going to be shot at us. You say, all right, why don't you put your Kevlar on now and sit in a tank instead of going out, getting shot in the chest 3 times and then putting on the Kevlar after? Like, you see what I mean? You see what I'm getting at? It's literally the same concept. So people have prepared. And you know, you can even go deeper than that. Because when people price stuff in, okay, when we price stuff in, let's go. This is, friends, you know I love this so much. I just love figuring out the puzzle because we're here to win, man. We're here to win. So doesn't take a genius to figure out the weakest of the weak hands sold here. Yeah. The weakest of the weak hands. And they sold here too. But this was more 9/11 part, you know. So let's just focus on the GFC. Because this was 9/11. This is like exogenous shock after the boom, okay? But this is more kind of what we're feeding now in crypto land. So what happened here, the weakest of the weakest hand got out. But when you look at the pricing, how many people thought the worst was yet to come? How many people thought? Not many. Let's look at it. Not many. Here it is, 23%. So not many people thought the worst was yet to come. A very low amount of people. Low. So the market reacts to shocks when it's surprised. The market does not like surprises. We as humans don't like surprises. You don't like when someone knocks on your door and there's 3 people, there's 3 shadows, and you don't know who they are. Who are they? Who are they? You don't like that. Humans, we don't like being spooked. Okay? Some of us are twisted, we do, but majority of us, we don't like being spooked. This happens in markets with asset pricing too. They're just a reflection of our human emotions. So if we go back, man, so you now know only a low amount. Let's write this down here. Let's write this down. Low amount of people. Let's just write unexpected collapse. Unexpected collapse. Because we saw from the survey, man, a low amount of people were expecting the collapse up here. Let's get a cute little arrow. Up here, a low amount of people were expecting it. Very small amount. So all those weak hands who were going to sell up here, they sell down here. And when there's less liquidity. So as an example here, you have nice thick liquidity. That's right, nice thick liquidity. Let's just use a number like 1 trillion. I'm just throwing it out there just to give you an idea, right? Because we all understand Uniswap. We all understand a Uniswap. So up here you have nice thick liquidity. But down here, you have dangerous thin liquidity. You have like 100 billion. And then there will be a knife, because they're falling like a knife, and this will be dark red. You see? So the weak hands, up here, they're selling to people more in a sense of calm. Okay? People who don't want to give up on the world. Down here, they start selling quickly. So you got to think about the future and the next 1 year. Right? So we had nice thick liquidity up here. But the people selling up here, all right, the people selling up here, they are expecting a dangerous thin liquidity market collapse to happen. That's what they're expecting. So that's the market's pricing in. We're pricing in danger. People are selling, because this is going to happen, you know. And we know from history, when people are all stacked on the same side, you basically flush out weak hands earlier than you expect. Because we're so used to like so much bad news happening. We can't possibly imagine that the good stuff will happen, right? But this is what happens, man. You know, fear is a stronger emotion than just euphoria, you know? So this lesson, man, this lesson's timeless. Look how many people are stacked. Look how many. So even me, man, even me. So yes, I know we're going to win. I know we got our fists out. We're ready to fight. We're here to win. But it's, man, I'm just telling you now. You're listening to me. I can make all these whiffy-waff, TikTok, you know, talking. Who cares? But I've said to you, it's hard for me to suspend belief and think we're going to go up here. It's hard for me to believe that. But I'm still going to plan for it anyway. It's hard, but because I believe that even if this scenario starts happening, they're going to start printing anyway. They're going to start printing. Because we are the people. We make the surveys. You know, at one point in the future, the worst will happen. Of course it's going to happen. But I think when the worst happens, it's not going to be when 40% expect it. I got a feeling it's going to be down here somewhere again. you know, where everyone's like, no, we're through. So that's why, you know, you can't write the future. The future is not set in stone. It is possible. So yes, right now, 43% of people expect it. Maybe, you know, it's possible that if we got up here, if we got to the top, you know, if we actually got up here, maybe that 43% drops down to like 20%. And you're like, whoa. Firstly, everyone said the recession's coming. Now, none of yous, danger, right? Danger, you know. And maybe it doesn't take that long, by the way. It's possible. It's possible that this happens like here, say 2023, maybe it happens like that. You know, so that's just something, we're going to watch this. We're going to pay attention, the commentary, the feel, psychology of the market. Are people still going to be bearish up here, or are they going to be bullish? And we won't really know until things like margin and leverage and all this stuff, right? And we'll know by the Fed talk. Because it's possible the Fed, they don't even cut rates up here because the market went up. You see all these things moving parts, but they were always moving. These parts are always moving, man. They're never static. This whole way, you think it was like, do you think someone came and said after this 1987 crash, yes, we'll now go up only for 20 years? You would have been seen as the craziest idiot. And every single time as well. Just so when Paul Volcker said, I'm putting rates to 17%, I'm going to crush all your dreams. And then the market rallied. You know, so here we are again. Is history repeat again? I mean, I don't know. That's why the stock market, I still don't like it compared to crypto. We're so early in crypto compared to this, man. So little exposure relative to that. So, you know, now we know that the crowd is stacked. Consensus is so dangerous to believe in. And that's why, you know, we're prepared for every scenario. Let's put this there. Let's say the market, let's say it goes up next year. Let's say it goes up here. I will be saying for our crypto bags, hey, you know, the Fed's getting really close to like cutting rates properly now. It might be wise for us to like take off 25% of your whole crypto stack, park it in stable coins, and now you're protected. And you will buy only on a significant crash after they start collapsing. So that's one scenario. Because, you know, but that might not even happen. Like imagine the government overprints again. You know, no one's even given any probability to that. What if, because we're all expecting that the worst is yet to come, the government stimulates too much again? And then we have this high recession, high inflation problem in like another 12 months after they stimulate. Like let's say they stimulate March to June of next year. Let's say we have the problem 2024 again. And then on the Bitcoin halvening, we like crash because they have to hike rates again. Like this. See, there's thousands of things. No one's thinking of that. Everyone's only thinking of the worst is coming and it's coming right now. So, you know, we are planned for every scenario. And that's why you're here. High value content. I love you all, friends. Until next time.